Good afternoon, everyone, and welcome to S-Bank's H1 result presentation. My name is Hanna Porkka. I am the acting CEO of the bank and also the head of wealth management. With me, our CFO, Mr. Mika Heikkilä. And I encourage you to ask any questions you might have during the presentation in the chat, and we will address all your questions at the end of the presentation. S-Bank's H1 was a very steady one, with a lot of achievements to be proud of, despite the very challenging market environment, or you could even say exceptional market turbulence. To name a few highlights, our lending increased to 6.4 billion, which is an increase of 12%. AUM ended approximately at the same levels than a year before. Our operating profit decreased by 6.3% to 13.3 million. Capital adequacy rose to 16.2%, and the outlook for 2022 remained unchanged. In the table below, you can see that our total income rose 7% year on year to 96.7 million. Both net interest income and net fees increased during H1. Profitability was weighed down by significant increase in regulatory fees. The financial stability fee and deposit guarantee fee grew 6.7-fold compared to the previous year. We also made quite substantial investments in business development, in the development of product services and IT. This caused operating profit to decrease by 6.3% to 13.3 million, and the cost-income ratio to increase. At the end of June, Standard & Poor's confirmed our long-term rating to BBB with a stable outlook. And at the right-hand corner, you can see a recap of both our business areas, which are banking and wealth management. And in banking, we offer daily banking service to our 3.1 million clients, and the accounts and Visa card and banking IDs are without any monthly charge. We offer payment services, which mean the Visa cards and the online banking. We offer financing, which are housing loans and consumer loans to our clients. And we also finance selected housing construction and housing companies. In wealth management, we have products in all major asset classes: equity, fixed income, and alternative products. We have a strong focus on alternatives, especially on real estate. Discretionary asset management we offer to our private banking and institutional clients. And our mobile investor advice app, Säästäjä, has been growing in popularity during the past years, and almost 77,000 investors are regularly saving through this app into our funds. The operations of our bank in the first half of the year developed favorably. And we have a strategic goal of 1 million active clients. And in the first half of the year, this strategic target became even closer than before. We got 58,000 new customers, new active customers during the first half of the year. And that is a 12% increase to the previous year. So we are very well on track towards our strategic goal. In addition to changes in our economic and market environment, we also had some internal changes. Our CEO, Pekka Yli-Hurula, stepped down in May, and until the new CEO is selected, I'm the acting interim CEO. Our daily operations at the bank continue as before. We continue serving our 1.3 million clients as before. We have a clear strategy, clear goals, and our over 750 colleagues are working daily to reach these strategic goals. And on the bottom corners, you can see a few selected highlights of our key business areas. We have in banking, the amount of purchases made by our Etukortti Visa card increased by almost 19% in the first half of the year. Our housing loan volume grew by 12%, which is 3.6 times the average market growth. And operating profit in our banking unit grew to 24.5 million, which is a 29% increase compared to last year. In wealth management, the number of unit holders in our funds grew by 14% to 353,000, which makes us the third largest fund company in Finland. Net subscriptions to our funds totaled almost 80 million euros. This puts us on the third place year to date out of 24 fund companies. Operating profit decreased to 1.7 million euros, mainly due to market impact on AUM and increased costs in business development and operational efficiency. Here you can see a recap of S-Bank's key figures. As a reminder, our balance sheet is almost 9 billion euros. I went already through the amount of clients, 3.1 million, and out of 5.5 million Finns, I could say we have a pretty good coverage. We have over 2 million online banking IDs, 2.7 million international payment cards, which means Visa cards. Our unit holders, over 350,000. And what makes us special, or maybe a bit different from our competitors, is that our clients can deposit and withdraw cash at around 1,000 S-Group outlets, which means like grocery stores or service stations. And in addition to that, we have 80 customer service points in the S-Group outlets. Then about our competitive position. We have been growing in many respects faster than the market, and that is what we are aiming to do also in the future. So what makes us different from our competitors? Our free daily banking services, which means that our clients don't pay monthly fees for their banking account, Visa card, or online banking IDs. We are part of S-Group, and S-Group's wide and well appreciated loyalty program. Our mobile app is becoming more and more popular. We have already over 250 million logins per year, which means 1 million times per working day, our clients log into their app. And this is a number that keeps on impressing me every time when I think of it. Our presence across Finland is quite substantial. You could say we're almost everywhere. And our brand is very strong, and I'll come back to that in a few slides more. And then some other factors enabling our growth in the future. Sorry. We have access to 3.1 million clients, which are increasingly using our products and service. Our active clients, or the amount of clients that use our use us as their daily bank, is increasing and increasing. And in our own targets, an active client is a client that uses widely our products and services. We are focusing on cross-selling between our two business units. We are focusing on scalable, data-driven online sales. And we have a very competitive offering in our wealth management services. Our clientele is reaching from small retail clients to private banking clients and the largest Finnish institutions. And we have a strong focus on ESG. Our business model and product portfolio is very focused and efficient. And S-Pankki is also well positioned to take advantage of strategic opportunities in the market, like mergers and acquisitions, what we have done several times during the past 15 years in S-Bank's history. On this slide, you can see a recap of S-Bank's financial goals. Our long-term financial goals is a 10% per annum income growth in prevailing market conditions. Our cost-income ratio below 60%, return on equity above 8%, total capital ratio of at least 13.5%. We don't have a set dividend policy, and our strategic target of 1 million active clients I've mentioned already several times to you. Our growth is based on activating our existing clients, cross-selling between the two business units. Digital sales enable scalability and significant growth. And 1.9 million clients are already using regularly our mobile app, S-Mobile. This is a slide you have probably seen before if you've participated in our presentations before. I'll just spend a couple of minutes on it. Most innovative, most responsible, most reputable, most committed, equal and most inspiring, and most valued. These are awards and honors we have received during the past years. And to sum up, more and more clients are using our products and services. The amount of active clients is increasing towards our strategic goal, and these awards and honors that are listed on this page give us a very strong foundation for our future growth. You could say that this proves that our clients appreciate us and we are well respected by them, and as a result, they increasingly use our products and service, which is of course our main goal. This was my part of the presentation, and now it's a good time to dig in further into the figures. And I'm giving the floor to Mika, and potential questions we will then address after the presentations.
So I will continue with the key financials. And first, some highlights from our key figures. They are highlighted on the right-hand side. So over these 3 years, we have had very steady growth in lending. The annual growth has been in 3 years, every year around 12.7%. At the same time, we still have a very strong deposit funding base. Loan to deposit is around 83%. So in overall, we are in good position when the interest rates are rising. In our asset under management, we have also have a very fast growth in last recent years. There is organic growth, but also we have made some acquisitions. So of course last year or this year there has been a market turbulence and most or many indices has decreased more than 10%. So we have kept quite good position there too. Hanna mentioned already the cost to income ratio. It's higher than our peers has, but still those regulatory fees and development costs are weighting that down. And while growing, we still have a very good, robust capital base. Total income, what we have on the left-hand side, we had a good growth last year, and it has continued this year. So from total income, about 76% is coming from the banking segment, and the rest from wealth management segment. On the operating profit, we made a same result as last year at this time of the year. The main reasons of that was that on the income side, lower income from investing activities were affecting to the result, and on the cost side, it was those regulatory fees which also affected to the result. Then from lending or our loan book, we can see that this 6.4 billion loan book, 5.4 billion is coming from household customers and around 1 billion from corporate customers. Both segments had very good growth. In 12 months, change is in household customers 12.2% and over 15% with corporate customers. Also in the total deposit side, the picture is same as in loan book on all lending. So almost 7 billion of that total 7.8 billion is coming from households and 840 million from corporate customers. We can see from growth figures that household customers growth was 11% in 12 months time, and with corporate customers it increased by 13.6%. Here we see the asset under management development. On the down, we can see that actually the fund capital has increased by 8.6% over 12 months period, but the wealth management side has decreased. So totally there has been about minus 1.5% decrease in that period. We don't have those own figures from local Tapiola anymore here, so that cooperation ended last year. So these are without or excluding those arms. When we look our credit quality, we can see that with repayment holidays, the situation has stabilized. It is around the same level what we have at pre-pandemic time. From total loans, these repayment holidays share is around 5.6%, and we can see that it's quite minimal with the corporate loans and with the household loans a little bit higher than the average. Also in the net credit losses, we have had very good improvement and development. In first 6 months, the net credit losses were 3.3 million, as they were 9.9 million year before. Also the expected credit losses provision is increased a little bit in its second quarter, but is still below the level what we have at the end of last year. As I said, our capital position is good and robust. Equity ratio on the left hand side has decreased a little bit while we are growing. On the right hand side, we can see that the key capital ratios, they are at the same level as at the end of last year. The total capital requirement is 12%, and our capital adequacy ratio was 16.2% at the end of June. From balance sheet, we look the right hand side, liabilities and equity. We can see that total it was 8.8 billion, the total balance sheet. About 90% of that is coming from household and corporate deposits. We made a 50 million tap issue of senior bonds in June, which strengthen our MREL buffers. From the asset side, to mention that almost 60% of the total assets are household loans. Then our own funds capital requirements and MREL. We can see on the left-hand side that our own funds decreased a little bit from the end of last year to June. The main reason was the decrease of value of fair value reserve. But on the same time, we could also decrease our risk exposure amount. So in that way, the capital adequacy, we could keep the same level as it was last year. What comes to the MREL requirements, our position is good and it's well above the regulatory requirements. Our ratio is at the moment 22.8%, as the total requirement at this stage is 19.7%. And also liquidity is we have a good situation. The total liquidity portfolio was 1.8 billion at the end of June. Almost 80% of that is cash in the central bank. We can also see on the left-hand side that the LCR ratio is almost 172%, as it was 150 at the end of last year. So in that way, we are in a good situation. And I think that was the last page here. So we have to look those.
If you have posted any questions, and it seems there are no questions at this time.
Okay.
So we thank everyone for participating, and in case you get any other questions or anything needs clarification, so we welcome you to contact us and we will clarify what needs to be clarified. But thank you for participating and have a great day.